I believe gold won't drop beneath 4,300. Therefore, purchasing it currently at 4,500, I believe there's very limited downside in gold at 4,500, correct? Silver, significantly more volatility, which in my view makes sense considering the scale of the breakout, correct? You understand we surged past 50. I mean, we essentially held there for a few weeks perhaps. And I was predicting on this and on my primary podcast that when silver climbed above 50, it was destined to be a moonshot and that 50 would provide support. Well, 50 served as support only momentarily. I believe support has now shifted to 70. I believe we're not declining to 50 whatsoever. The latest performance of precious metals indicates a definite change in investor sentiment, with gold and silver now advancing together, rather than separating as they frequently have in past cycles. Gold produced a robust and continuous advance, strengthening its position as a monetary foundation during times of fiscal disorder and currency devaluation. Silver, in the meantime, evolved from a laggard into a frontrunner as the cycle developed, gaining speed sharply once faith in wider financial stability started to diminish. Peter Schiff has consistently maintained that this pattern is characteristic of significant precious metals bull markets. Gold generally advances first, serving as an early indication signal of monetary pressure, while silver comes later with substantially greater force once involvement expands. As this cycle advanced, the rally grew beyond basic safe haven purchasing, gaining momentum from both increasing investment demand and growing structural limitations in supply. Gold's consistent climb reflects a reevaluation of long-term monetary risk. While silver's volatility demonstrates just how narrow the gap has grown between supply and demand, Schiff has stressed that silver's double function as both an industrial requirement and a monetary protection makes it particularly reactive when economic instability coincides with physical shortage. This helps clarify why silver often moves in significant waves rather than gradual trends, especially when paper pricing structures struggle to capture real-world situations. What emerges now is that the advance is no longer restricted to the metals alone. Mining equities have started to react to the enhanced economics generated by elevated metal prices, comparatively stable costs, and growing margins. Schiff interprets this as insignificant validation, observing that equity markets frequently lag until profitability becomes clear. Despite current gains, he argues that valuations throughout the sector still fail to adequately capture the earnings influence of sustained momentum in gold and silver. In that framework, the present move seems less like a speculative jump and more like a fundamental revaluation prompted by monetary reality rather than temporary enthusiasm. With that in mind, we now transition to excerpts from Peter Schiff's interview. Gold finished this week on a positive note, up just over $30 an ounce. We finished at $458, therefore above 4,500. Silver didn't quite finish above 80, though it reached above 80 again this week. It reached above 82.50, but it was up nearly $3 on the day, finishing just under 80. I believe it was 79, 84. But percentage-wise, gold is currently up 6% this year. This is merely the 10th of the month, 10 days into the year. Naturally, many of them weren't even trading days due to the holidays and the weekends, but you're up 6% already. Silver is up roughly 12.5% thus far in 2026. So just continuing where last year concluded, the precious metals bull market persists. Platinum, again, up about the same percentage, I believe, as silver. Also, examine what occurred with the mining stocks, because another criticism on the gold bull market was the absence of confirmation in the mining stocks, because the mining stocks were falling behind. They're expected to be leading. Mining stocks are expected to be more robust than the metal in a bull market. That wasn't the situation. But of course, that's why I was emphasizing the point particularly early last year. In reality, I released a special report, I believe in April, the optimal way to buy gold, and that was purchasing gold stocks, because gold stocks had scarcely risen on the year, even though gold was above $3,000 an ounce. Well, the GDX, which is a gold stock index, completed the year up 153%. And the GDXJ, which contains, mid-caps, more mid-caps, it's termed juniors, but they're not truly juniors. They're simply a bit smaller than the GDX. That index was up 166% EA last year and off to a powerful start once more this year. The GDX is up 8% thus far in 2026, and the GDXJ not that much further behind, up approximately 7%. 2% thus far on the year, but these stocks are now surpassing the metal itself, which indicates now everything resembles a bull market. You can't claim, well, you're not witnessing a confirmation in silver because we are not seeing it validated by the mining stocks, what we possess. And in fact, one aspect about the mining stocks is that even though they've surpassed the metal, they didn't surpass it nearly sufficiently given how substantially gold and silver prices have climbed and how tremendous an effect that's going to have on earnings of these mining companies. Stocks remain very inexpensive, and that's still a favorable contrarian indicator in that the investing public still doesn't recognize how inexpensive these gold mining stocks are and silver mining stocks are. They still don't grasp the importance of the bull market. They're still distracted, you understand, by the tech bubble or the crypto bubble, and they're not truly paying attention to this chance, which is why investors should still be purchasing not only physical gold and silver at these prices, but particularly the mining stocks. And you understand the gold mining stocks, not only are they going to generate a lot more profit because the price of gold is rising, but look at oil prices. Oil prices are beneath $60 a barrel. They're about $58 a barrel. That is the most considerable cost in gold mining is energy, and that's declining. Now, I don't believe oil prices are going to remain down, but they're down currently. So this is excellent for the profits of the gold miners, but also silver rising is going to have a substantial effect on gold mining companies because essentially all the gold mining companies extract some silver. It's a byproduct of gold. And the way they document it, it's not earnings from silver mining, but the money they receive from their silver, they use that to reduce the cost of mining the gold. So that indicates not only are mining costs declining because of low energy prices, but because they're receiving so much from their silver byproduct, that is significantly reducing the cost of their gold, and it is going to be reflected in their earnings. So all the gold stocks are going to profit from higher silver prices, even though people aren't purchasing them because they're silver miners. They still extract a lot of silver, and it makes a significant difference on their net costs of mining gold. And naturally, there are companies that exclusively mine silver, and they were the star performers of 2025. But once more, given how inexpensive they were when the year started, they're still inexpensive now, despite tripling and quadrupling on the year. So even though we've witnessed this, really, you want to purchase gold, you want to purchase silver. Gold, I don't believe there's very much downside risk at all. I don't believe gold's declining below 4,300. So if you're purchasing it now at 4,500, I believe there's minimal downside in gold at 4,500. Subscribe button and stay updated.